Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of more indications the top of the current economic cycle has passed. The first estimate of American economic growth for the March 2018 quarter is out, and it shows an expansion of 2.3%. This is slightly higher than analysts were expected, but well below the December 2017 quarter rate of 2.9%. This result is the slowest growth rate over the past year. Basically, consumers reined in spending, even though tax cuts improved take-home pay in many households. The data also showed personal consumption expenditures, that's PCE, the inflation metric the Fed likes the best, rose at a slightly faster rate. The core measure, which excludes food and energy, was up 1.6% year on year, although the quarter-on-quarter rate was a more notable 2.5% rise. That is high enough for some analysts to change their forecast to expect 4 Fed hikes in 2018 rather than 3. And the other major US consumer sentiment survey was out over the weekend, confirming the positive reading, although the high levels are slipping. Mortgage interest rates are rising in Canada. The new fixed rates are lower than here for terms shorter than 5 years, but similar at 5 years. Canada's central bank policy rate is 1.25%, which is 0.5% lower than ours. And the NAFTA negotiations seem to have stalled. Reports indicate the US is wanting last-minute changes. In Japan, their central bank has abandoned its attempt to predict when they will reach 2% inflation, another sign that the country is yet to escape a long period of falling prices. And Norway's giant sovereign wealth fund is struggling to make gains now. It actually posted a loss in the first quarter of 2018, mirroring the difficulty other investors are having. Their equity portfolio was down 2.2% and their bond portfolio was down 0.5%. And Argentina's central bank surprised markets late on Friday by jerking its key interest rate up 3% to 30.25%, citing the effect the stronger US dollar is having and vowing to act again if inflation persists. Inflation is running at 25% in Argentina. US Treasury 10-year yield is now at 2.96%, that's down 1 basis point. The Chinese 10-year is up to 3.65%, that's up 1 basis point, while the New Zealand equivalent is at 2.91%, unchanged. Gold is at $1,323 an ounce in New York, that is up $7 since this time on Friday. And oil prices are a little changed today at just over $68 a barrel, while the Brent benchmark is just over $74.50 a barrel. And the Kiwi dollar is starting the week down at 70.8 US cents after another retreat over the past week. It was 72 at this time last week. So a fall of more than 1 cent on top of the previous 1.5 cent fall. On the cross rates, we're now at 93.4 Aussie cents and 58.4 Euro cents. That puts the TWI at 72.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.